Hello, everyone, and welcome back to In Conversation With. Today, we're really excited to have UnionDigital Bank with us. In particular, we have Henry Aguda, who's the CEO of UnionDigital, and Mike Singh, who's the Chief Lending and Revenue Officer for UnionDigital. UnionDigital is a really good example of how digital banks are evolving within Asia Pacific, and really excited to talk with them today. First of all, Mike, Henry, thanks for taking the time today. Really great to speak with you. Henry, maybe we can start with you. For those who may not know UnionDigital Bank, could you give us a brief overview of the bank and kind of the focus areas?
Well, Union Digital is a 100% fully owned subsidiary of the main bank, which is Union Bank. And Union Bank, having been known as the best digital bank in the Philippines and in the region, thought of creating a really digital from the start bank, which is now Union Digital. So there are only six digital banks in the Philippines, and the digital bank category was created in order for us to address financial inclusion. Because up to now, sadly, while most countries have progressed in terms of financial inclusivity, the Philippines still needs to double down in terms of bringing in more Filipinos in the banking sector. So we were created primarily to bring as many of our countrymen into the financial services sector. So that's Union Digital. We've only been operating for maybe less than 2 years. We have exciting stuff ahead of us, and where we are right now is we're focusing on strengthening our financial health. Happy to say that Mike's been very successful onboarding a lot of our lending clients, and this has allowed us to be one of the fastest to profit digital banks in the world, basically. So that's what Union Digital is.
Yeah, that point about being one of the fastest profitability, especially in Asia, where it's a very competitive market. Can you talk a little bit, Henry, a little bit more about how that happened? I mean, what do you think were the key success factors for the growth of Union Digital?
Well, first, we really have a very lean organization. We don't have any of the huge branch infrastructure or ATM infrastructure that normal banks would have. Second, our tech stack is actually put together to be 80% variable cost, only 20% fixed. So we increase our OPEX in technology as we grow. And I'm happy to say that, while taking care of the cost side, our team on the business side has been able to tap a lot of the lending clients that normally would not have been explored or tapped by the main bank. So we're doing that. And the fact that we're doing ecosystem play also provides us a lot of stickiness in our proposition. And there's a lot of economies of scale. I mean, Mike's on the other side of that equation, and he's the one bringing in the top line.
Yeah, so Mike, I want to come to you. I mean, who are Union Digital's typical clients, and why do you feel they choose Union Digital Bank over some of the more traditional players, or indeed the other digital players in the Philippines?
Yeah, so Zenon, I think, a key, they're not, most of the digital banks in the region are neobanks. I think a point of differentiation for us and what makes us unique and special is we are an extension of a legacy, a very successful, established legacy universal bank, which has been in market for a while. It's been one of the fastest growing in terms of customer acquisition. I think we're breaching 10 million accounts. And as Henry said, we're 100% owned by the Universal Bank. So the bank is fully supportive of our business. And what we've done is we've come together and we've identified how we can segment the bank's population to maximize the opportunities, not just to provide products and services to customers, but also to monetize on that customer base. So the bank has millions of customers that belong to the middle to lower half of the income pyramid that have typically had one transaction with the bank, or one transaction a month, whether it's a payroll disbursement or an aid disbursement. where the bank has not engaged that customer in other ways. The banks, as you know, banks will typically have very high minimum ticket sizes for loans, anywhere from one to five to $10,000. The cost to underwrite that loan is very high. As Henry said, we have branches, we have high reserve rates, we have vaults, we have underwriting teams, we have physical manual verification, and there is the unit economics to underwrite a low income loan at $100 is difficult for a bank to do. And that's where Union Digital comes in because of our infrastructure and our low cost to serve and our focus on alternative credit scoring and alternative lending that allows us to take those customers of the universal bank that belong to the middle to lower half of the income pyramid and provide them with products. The first being, of course, is credit, which is a key need in an emerging market. So we're able to underwrite these customers using not just alternative sources of data, but also their bank transaction history. So many of these customers have been in the bank for up to a decade, and they have deposit accounts. They have, they have tenure. We know their employment status. So this is very useful data that we use in underwriting that allows us to be able to predict who is credit worthy and to be able to offer lending us to be able to offer average ticket sizes that meet their needs, right? So anywhere from $50 to $100 to $250 and still produce positive unit economics because of our low cost to serve. So that's the segment that we target from the bank.
That's really interesting. That cost to serve and the unit economics is pretty incredible with a digital bank. I mean, we did some studies before on China, and we found that the average Chinese bank costs about 250 US to kind of evaluate a loan. And like you said, I mean, if somebody's looking to borrow a couple $100 or $1,000, all of a sudden that loan is not profitable from the beginning, and it doesn't make sense. But then once you get into the digital space, we looked at things like My Bank, which is Ant Group's obviously digital bank in China. I mean, their unit economics, it's like 25 cents to do a loan, which completely changes the nature of things. I just want to come back to that idea of Union Digital spinning off from the mothership, so to speak. I mean, we've seen banks across the region. The one that comes to mind in particular is Mox Bank in Hong Kong, that obviously has a relationship with Standard Chartered, and part of the rationale for that was on the technology side, because obviously incumbent banks have a huge technology debt and legacy infrastructure that they need to get around. But presumably, the idea with this was that Standard Chartered was going to launch Mox Bank and then gradually move its traditional infrastructure onto the new infrastructure, onto this new greenfield infrastructure. Was that part of the rationale for Union Digital? Maybe Henry, you can pick this up. I'd just be curious to think about how the considerations around technology and legacy infrastructure and greenfield infrastructure came into the decision to set up Union Digital Bank.
Yeah. So Zenon, so a bit of a background. Prior to taking on Union Digital, I was the Chief Technology and Transformation Officer of the main bank and Union Bank. And while we've modernized most of the front end application of the bank and some of the backroom applications, our core system is still monolithic. So it's the old architecture. And we realized that in order for the main bank to now move to the new age banking services, our biggest problem right now, or technology debt, would be the core system. So one way of changing that situation is to change the core system of the main bank, but then you run into a lot of issues, like you're changing the engine of a plane while it's flying. So we said having a digital bank that's built from ground up with new technology stack actually provides us a second engine for the technology stack of the main bank. So with Union Digital, we're building a thin core. That concept is about having a banking core that's so light, so agile, that it doesn't have all the overhead of a monolithic core. So Union Digital is actually going to be the future banking core of the main bank, and that's a stated strategy. So the Mox bank example is a template that we're actually following very closely, and I think as they do their experiment of moving products from the legacy core to their new digital bank core, we'll be watching it very intently, and we will learn from what they're doing. And that's the plan. Moving forward, it is foreseeable that in the next years or so, a lot of the products of the main bank will now be seen as executed in the Union Digital tech stack. Having said that, though, since we know that there are a lot of other technology that are groundbreaking with the main bank, like their initiatives in blockchain, API, we're also using their modern stack. So one of the things we're doing is we're bootstrapping on the modern stack of Union Bank, so that once the stacks are all similar, we just rip out the old core for the legacy bank and move it to the new core of Union Digital, and the systems would be flawless. At least that's the plan.
Yeah, it sounds much more simple when you say it than
Yeah.
in reality. But I get where you're going on that. Henry, you picked on a good point around APIs and open finance. How has Union Digital Bank kind of pushed forward with open finance in the Philippines? Because that's something we're seeing in a lot of the emerging markets being of real benefit. How important is an open API infrastructure to the bank, and what are some of the services that you're offering to some of the other to your customers in the space?
Yeah, so Senan, that's very timely because prior to this interview, I came from the meeting that was organized by the six digital banks, and we're trying to organize ourselves, and we prioritize the initiatives that we feel the digital banks would need, and one of them is open finance. So to us, that's very important. Why is it? Because it allows us to do embedded finance. And with open finance and open API and secure API, you could just imagine at one point, bank customers won't even have to download a banking app. They would just be in their lifestyle app, in their telecoms app, and we will just be a widget or a tile that they can access financial services from. So that only happens if you know have open finance and if you have secure API. So that is very strategic to our existing competitive advantage and long-term viability of not just Union Digital but all of the digital banks.
It makes a lot of sense. I mean, I think in terms of that differentiation, just going back to, I mean, obviously the parent bank has helped a lot in getting Union Digital up and running. What about the other way around? I mean, what are the lessons that Union Digital Bank is learning that can go back to Union Bank? I mean, certainly in terms of the technology you had talked about before, Henry, but outside of that, I mean, what are some of the key lessons that you're learning as a digital bank that may have applicability in the traditional bank?
Well, one is we can still move much faster. So the parent bank prides itself for being one of the fastest to move in terms of product deployment as a universal and commercial bank. But and I was there. I was proud of the speed that we had at that point. But having experienced Union Digital in just a few months, I mean, we're moving much faster. We're moving much faster, not just in the technology, but in the business model also. Name it, we have 100 or so other ideas that are in the pipeline. Our product house couldn't keep up with the ideas. The concept there is the product house will become a factory in terms of how we get products out the market. The second is our underwriting, and I think I'll pass the underwriting bit to Mike because there are a lot of things that Mike and team did on the underwriting that the main bank can actually learn from, especially in the way you risk weight the interest. Maybe Mike, you can explain some more.
Yeah. So yeah, I think to your question and Henry's point, the term that I've heard is growth hacking, right?
Yeah.
If you want to grow at the rate, if you do, if you want to grow it, if you grow at the rate that if you want to grow at the rate that other universal banks grow at, you do exactly what everybody else does, right? The way we grow exponentially is through breaking things and experimenting and trying different things as rapidly and agile as possible, right? Test and learn. Whatever fails, put it on the shelf. Whatever succeeds, double down on it. So that's been our goal. And as it relates to underwriting, it's about experimentation. So when you're going after middle to lower half of the income pyramid, it's never been done before in this country. Regionally, even emerging markets have struggled to identify positive unit economics lending to the lower half of the income pyramid. But it's all about experimentation in using the latest technology and latest underwriting, such as mobile device data or alternative sources of data, in building your lending model so that you hit that, that sweet spot where and as Henry said, where you price for risk, you test and learn, you bring in some bad loans so that your models get smarter, and you find that perfect profitability, that unit economics where you're pricing for risk, your cost of risk is low enough where you bring in a margin. So I think that's what we've done to be able to lend to that segment of the market and do it profitably and at scale. A lot of digital banks and even universal banks are, dipping their toes in it, but no one's been able to do it at scale because the unit economics just don't work. Cost of risk is too high. Cost of acquisition is very high. I can't emphasize enough the competitive advantage we have being an extension of universal bank that brings with it the customers, right? So our CAC is near zero, and cost of risk or default is all a product of how much data you have. And we have data from these customers. So those two competitive advantages allow us to lend at scale to this segment of the market. And it's all about testing and learning, going into new segments, testing products, testing how high we need to price for it, looking at the bad loans that come in, improving the models and finding that perfect balance. And then we start scaling into those segments.
I love the idea of bringing in bad loans just to test it in production as opposed to like kind of modeling. I think that's really quite interesting. Mike, I just want to stick with you on that alternative data side of things. I mean, a lot of banks talk about alternative data. What does that mean for you? And what are some of the examples of the data that you can collect without giving away the secret sauce of lending? But what are some of the alternative data models and data points that you're able to pull in that help you to make those lending decisions?
Yeah. So I mean, it's becoming, 4 years ago when this was new to the market, when I launched a fintech in the space, it was very novel. It's now becoming quite common, and everyone's talking about it. Everyone's trying to do it. The stuff you hear out there, social data, telco data, behavioral data, even things like how you complete your application on your mobile device, what angle you hold the phone at, do you cut and paste your name into the name field? All of these things are now available. Um, I think one of the things that we will eventually build into our system is mobile device data. Is quite powerful. Um, And in my fintech, we did that for a number of years. Our default rate started at 80%, and 12 months later, they were in the single digits because the model just gets smarter and smarter. But to give you some examples, it's all about statistical correlation, right? So um, poor performance or delinquent accounts, bad behavior will have certain parameters within their behavior set that are consistent with others, right? So, there are things like do you use your calendar is a proxy for your level of risk, right? Some of it is rational and makes sense. If you use your calendar, you're likely a responsible person. If you don't, you're not. How many missed calls you have? Are you avoiding people? Are you irresponsible? So it's some of it is rational, some of it is completely irrational, just purely statistical based. But again, it's data is now the currency, and the PhDs that we have on staff, I call them rocket scientists. Um, are the guys that know how to crunch that data and profile sets of customers.
The flip side of that, obviously, to analyze the data, you need the technology. Can you talk, either Mike or Henry, a little bit more about kind of what has technology meant to Union Digital Bank? I mean, we have that kind of base level of infrastructure that you talked about before, Henry, but what are some of the other exciting technologies that you're looking at, and how have you integrated them into the value proposition of Union Digital Bank?
Well, the technology we have is we're cloud native. We're a digital bank that's cloud native from day one. And while other commercial banks are struggling to move to the cloud because cloud provides you scalability, it provides you the flexibility to move work processes and compute resources at a snap. So we have that. So we're agile from the beginning. Second, the group has access to an analytics organization called Aboitiz Digital Inc. As Mike mentioned, we have, at last count we have 8 PhDs working and using all the machine language tools that they can master. And they provide us the speed at which we can get insight from the data that we collect. I guess another thing that allows us a big advantage with the tech stack that we have is it's all mostly subscription. So it's like a tap. I can turn on and off the cost that we have. If business is good, we could just scale, turn on the subscription scale. If at one point we see a slowdown, we could just calibrate down the cost. That's why our cost to income is going to be one of the best in the industry. So that's what technology affords us. Of course, feeding off from the intellectual property that the parent has, we have access to blockchain technology that allows us cross-border payment through blockchain, connecting rural banks through blockchain. We also have access to some of the Web3 systems that they've been created. The main bank has crypto trading desk. I think we're the only one in the world that has that with the bank. It's not like a partner that a bank partnered with. It's really the bank with the license to do crypto trading. We have access to NFT cool stuff that they've done. So those technology, at one point in time, we will incorporate in the product offering of Union Digital.
Very interesting. I mean, the one, Henry, that you didn't mention that's obviously on the tip of everybody's tongue and mind right now is ChatGPT. I mean, having used that, and I always describe my typical strategy with trying to do anything on either a telephone,
Yes.
customer support line, or in a chatbot is typing in operator or pressing
Yes.
9 repeatedly until I can talk to a human. But my experience with ChatGPT is such that I could actually see that being a viable channel. How do you think that changes the nature of things? Because I'm sure you have some AI chatbots and everything else on the digital
Don't get
platform.
Zena, don't
but-
get him started on ChatGPT.
Okay.
Yeah.
Okay.
Well, one of my team suggested I just use ChatGPT to do this interview. They said I might do a better job, and so I had to sack them. But after that, yeah, I mean, it is pretty incredible when
Yes.
these can do. And the other test that I did was, I'm 46 years old. Give me a retirement portfolio for today, 5 years from now, and 10 years from now. And of course, it says, look, we don't know, Zen, in your financial position, but here's what we might suggest. And really getting to that point that it's quite scary, the implications in general for life, but more particularly for the financial industry. How do you, I mean, as Mike said, Henry, you might have some ideas around this, but what is your thinking with ChatGPT and AI in general?
Okay, that's a hot topic. Everybody's talking about it. But I'd like to say Union Digital is the first digital bank using it. So this is how we've been using it. When was it? Last week, I think we had the town hall, and the winner of that contest is actually here with me, Kim. The contest is who will be the best prompt engineer. So like most tools, it's only as good as the person using it. And for ChatGPT, I mean, you ask a silly question, you get a silly answer. So prompt engineering is what we've been telling our people. You need to be able to use the AI properly. So we had a contest. They came up with the best use of ChatGPT. Our winner is our PR person, Kim. Shout out to Kim. She's our first Union Digital prompt engineering champion for ChatGPT. So that's one. Second, uh, I had a group of developers meet with me, and I asked them, "Hey, how long can you create some of the smart contracts that we need?" And the normal reaction would be anywhere from 6 months to 200 people. They're now using ChatGPT. I kid you not, to generate Python codes. So they're using the code generator of ChatGPT. Of course, once the code's been generated, they do another pass at it. But hey, they're using it. So there will be a product out there from Union Digital that I will announce to the world that's purely done on ChatGPT Python. Third is most of our research are now done on ChatGPT, and it's scary. I tell you, it's just version one. Once version 2.0 comes out, 4, 5, 6. I tell you, it's going to be part of our offering as we won't need the usual call center setup anymore. They just have to go to a chat GP. What remains to be seen though is how they commercialize it, and so far it's free. I don't know what the enterprise GPT is going to cost, but whatever it is, it's going to be groundbreaking. So we're using it right now, and we're trying to make practical use of new technology and showcase it in our product offering.
Yeah, it makes a lot of sense. It's really incredible what's going to happen there. I saw Mike looking a bit nervous. Maybe it's going to replace chief revenue officers and lending officers, but probably take a couple years for that. We're coming close to the end of this, and just have a couple of final questions for you both. Mike, coming back to you. I mean, let's move away for AI for a second. What do you think, when you look forward for the future, what do you think the one thing that will surprise people about digital banking or the industry in general, or what is the one thing that no one is talking about but should be talking about?
Yeah, I mean, at the end of the day, and this has become very clear to us over the last 18 months of building this bank, is two things, right? Is one is, what is your point of difference? When you talk about fintech and disrupting industry, how are you actually different? How are you differentiating to, for example, a Union Bank or even a DBS that is highly digital? What is the value of a digital bank? Number one. Number two is, what is the monetization model, right? Because at the end of the day, you have to be sustainable. And I think many banks out there are really struggling with those two things. On the second one in particular, imagine starting a neobank from scratch in a country like the Philippines. No customers, no data. The cost of acquisition now for customers, in this market is very, very expensive. The keyword personal loans or cash loans is very expensive. You could be spending up to $10, $25 to acquire a single customer. And to do that at scale, and the segment you're targeting, where typical loan sizes, like I said, are $100, and then building your data set, typically to build a strong credit model, you need loads of data and months of experimentation before you get to positive unit economics. So I worry about some of the neobanks in the space and what their path to profitability is, number one. And I really am excited about the competitive advantage we have as an extension of an existing universal bank, where we have those customers and we have access to that data. The first question is a little tougher. How do we differentiate? And for me, I think it comes down to, we're both highly digitalized, and Union Bank is definitely going to continue to evolve their digitization or their transformation, but we're targeting different segments of the market. And that's what's been made very clear to us, right? So we've taken the income pyramid of the Philippines and we've split it between the Universal Bank and Union Digital. So now we know exactly who we're going after. We're leveraging our low cost to serve and our tech stack and our automation and our variable costs, as Henry said, to be able to serve the lower half of the income pyramid. So that makes, on those two fronts, I think those are two key questions that digital banks will need to continue to ask themselves over time.
Yeah, those are really good points. And they seem incredibly obvious, but then we see so many examples in the market of banks that don't have a clear differentiation or path to sustainability. But that's, I think, this year more than others, as we start to see valuations come down in the private markets, that's really coming home to roost, and all of a sudden profitability matters. Henry, just to come over to you to end on you. And if you had any piece of advice for digital banks in other markets outside of the Philippines, what would that be?
Well, the formula for a digital bank to be sustainable and to grab market share has been for quite a while. Ecosystem play brings you growth, and it brings you profitability. That's been the formula: ecosystem growth and profitability. But the market have changed. There was a rug pull in terms of the valuation of digital banks right now. So my recommendation is change the formula. Focus now on profitability, and the profit uh, that you get allows you to build your capital. And your capital, if you're very, very clever at it, allows you now to increase your loan book. And that's a virtuous cycle. Your loan book gives you the NIAT that allows you to increase your capital, that allows you to be self-sustaining. You know how it is. Most digital banks have a fintech background, and every month or so they're chasing the next round of investment. So my advice to the digital banks right now is change the formula, focus on financial health, and when the market starts changing again, then you can now move into to growth and ecosystem. So that formula has worked for us. As I mentioned earlier, I guess we are one of the fastest digital banks that have gone to profit because of that financial discipline we have. We're focusing all our resources towards the product that allows us to build our financial muscle, which is lending. And really, banks make their money out of lending. Second, lending is the one that brings us closer to financial inclusion, because ultimately, lending allows you to give resources, financial resources, to the people that need them the most. So I think that's the recommendation. Come down to the reason why digital banks were made, and it is about financial inclusion. Financial inclusion is about getting those resources to your customers. And by the way, by doing that, you generate profit that allows you sustainability in the long run.
It's an amazing formula. And you guys have really done a good job, it seems, cracking that formula to become so profitable so quickly. Mike, Henry, thank you so much for your time. This has been an amazing conversation, and look forward to keeping in touch on this.
Thank you, Sanan.
Thank
you
you
very
so
much.
And thank you everyone else for joining in for In Conversation With, a series that we do looking and talking to some of the fintechs around the region. Thanks for joining us today.